Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro dollar. A bullish white soldier yesterday, but also day two in a two-day separating lines pattern. The squishing of the market on a closing basis between a flatlining long moving average, currently 108.27, highlighted in gold on my daily chart, and the mauve-coloured now flatlining medium moving average, currently 108.18, has seemingly ended with a strong move higher. Prices rose up and were capped by the next overhead resistance, the 50% Fibonacci line for 2023 at 108.64. It was also another consecutive close up over the small mid-January to late February bearish expanding wedge pattern, currently 105.64 to 107.96. For the moment, I have still kept highlighted in green the October 2023 to late January 2024 broken bull channel, as I'm still wondering if the market will trawl along the underside of the lower bull channel line, currently at 109.34. In between the 50% Fibonacci line and the lower bull channel line, we have the short medium moving average, currently at 108.85, highlighted in green on my daily chart. So far today, a further attempt higher, but still capped by that 50% Fibonacci line for now. Cable, aka sterling against the US dollar. A fifth bullish white soldier yesterday and a continued suitable follow-on higher to early last week's bullish engulfing pattern. I'd add it was also a possible bullish matching pattern and even a possible bullish side-by-side white lines pattern. The market continues to establish itself back within the broken November to December 2023 shallowy bullish shift pitchfork, highlighted in dark blue on my daily chart. The lower time, currently at 106.54, is below, if not quite comfortably below. It was also the second close back up over the flatlining short medium moving average, currently 126.77, and a September 2020 low at 126.72 since late January. The move up was again capped overhead by the familiar next resistance, the 50% Fibonacci line of the June 2016 to September 2022 move at 126.99. We also have general congestion formed between December 2023 to January 2024, from where we are now up to the middle time, currently at 127.84. So far today, we're caught between the September 2020 low below and the 50% Fibonacci line above for the moment. Euro sterling. A reactionary bullish white soldier yesterday, not quite making it as a bullish above the stomach pattern, but close. Prices continue to be attracted to the December 2022 low at 85.45, though this time it was with a close up over the dark blue highlighted middle time, currently at 85.37, a November to December 2023 bearish shift pitchfork. However, we're also still within the breached, not broken, small purple highlighted, gently rising late January 2024 to date expanding wedge pattern, and that's currently 85.20 to 85.93, which obviously also tempers any bearishness a little. Further down we have the bright red neckline of the May to August 2022 head and shoulders continuation pattern. This is noteworthy as it had successfully held up prices mid-February, whilst overhead we have three descending moving averages, the nearest being the short medium moving average, currently 85.45. So far today, a dip towards the December 2020 low, but a rejection of it for now, and instead an attempt to explore the top side of the range. US dollar against the Japanese yen. A key reversal up and bullish engulfing pattern yesterday, which wasn't that hard to do considering the previous session was an indecisive doji cross. It was nevertheless another quite high close, the second highest since mid-November 2023. Overall, we are still settled within two major pitchfork patterns. We have the February 2022 to January 2023 bullish shift pitchfork, that's just over a year old now actually, highlighted in purple on my daily chart. We are in between the lower time below, currently at 143.38, and the middle time above, currently 157.46. We are additionally very close to the middle time above of the July to December 2023, over a year old. That's the middle time above is at 151.23, and the bullish Andrews pitchfork there, which is highlighted in bright red on my daily chart. Well, so far today, an immediate reactionary move lower, what looks right now like a bearish opening black Maribozo. It wouldn't need that much downward pressure to already make it a weekly key reversal. Caution, watch this one carefully, especially on the downside. US dollar against the Chinese yuan, the CNH, the offshore Chinese yuan. A third bullish white soldier yesterday, but it was capped again by the slowly declining medium moving average, currently at 721.02, whilst the downside had implied support from the May 2020 high at 719.64. Further above, we have the slowly rising long moving average, currently 722.17. And further below, we have the almost flatlining short medium moving average, currently at 718.14. So, not much to say really. We'll only repeat what I said yesterday, and that is we have an unusual situation in the Chinese yuan, not because of the lack of movement, but that we had a weekly key reversal up last week in US dollar CNY, the onshore Chinese yuan, and at the same time a weekly key reversal down last week in the US dollar CNY, the offshore Chinese yuan again, but in the 1 year NDF. Seemingly we're undergoing some changes in the curve here. So far today, well, not much, capped by the medium moving average and a very narrow range, which is making it all look suspicious. US dollar against the Mexican peso. A second indecisive doji cross yesterday, this time with the market sitting either side of the March 2016 low at 1709.23. There is further support below from the short medium moving average, currently 1706.36. But is a declining support, and that's important to note, a declining support, and the next support below after that is the April 2016 low at 1703.89. However, the best support is actually at the dark blue highlighted middle time, currently 1694.17 of the December 2023 to January 2024 mildly bearish shift pitchfork. This bearish pitchfork also accounts for the best overhead resistance, with the upper time above currently at 1728 even, with the adjacent declining long moving average currently at 1724.98 and medium moving average currently 1730.51. And they're providing additional reinforcements. Now, one could argue that the market is utilizing the middle and upper times as a de facto bear channel, and I would go along with that argument. So far today, an open on the March 2016 low and a dip down to the short medium moving average, testing it, pushing through it, and now looking now at the April 2016 low.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.